City of Santa Barbara will now come to order. We'll start with public comment. Any members of the public wishing to speak on topics not on today's agenda? Seeing none, we will move on to our first agenda item. Mr. Samario.
Thank you, Mr. Chair, members of the committee. Actually, I'd like to start with a quick introduction. We have our new accounting manager here, Ruby Carrillo. And I say Rudy because she replaced Rudy Livingston as our accounting manager. I told her in advance I'm going to call her Rudy every once in a while. But she comes to us from the city of Upland. She was the assistant finance director there for about 10 years, has now moved into Santa Barbara, and we're really excited to have her here, part of our finance department team.
Great. Welcome.
And I'm hoping in the future she'll be giving these reports.
Okay.
So, yes, we're here to present to you what we normally call our interim reports, but as you know, this is for the fourth quarter, actually for the year ended June 30, so this is not just sort of status report. This is kind of telling you how we ended the year. We're not quite done closing the books. We still have our audit to go, but we think we're pretty close to being, having final numbers, but it's still subject to some change between now and the end of the audit. But at least we're going to give you a sense of the order of magnitude, particularly, how we ended the year in the general fund, where I know there's a lot of concern. So we'll start as usual. We'll start with a look at the revenues in the general fund, and Ms. Tara will talk about those. I'll follow with a discussion of general fund expenditures by department, and then also look at reserves. How did the year end in terms of what the impact was to our reserves, and then get into enterprise funds. So with that, I'll turn it over to Ms. Tara, our Treasury Manager.
Good afternoon. Good afternoon, Chair Francisco and committee members. I'm Jill Tara, Treasury Manager, and I'll walk through the general fund revenue results as of period 13. We have most of the year-end entries booked, so we don't expect any material differences in the numbers we present today, with the exception of sales tax. And as we'll see later on in the presentation, for the fourth quarter, results for sales tax aren't in yet. We'll get those later this week and find out exactly how we did, and we've used our year-end assumption at this point of an estimate to come up with these numbers. Up ahead on the overhead, you'll see in the far left-hand column the different revenues that comprise total general fund revenues, starting with sales tax and our big three taxes up at the top, then below the line are lesser revenues. Down at the bottom, the total general fund amended budget for fiscal year 11 was $100.5 million, and you can see that on an actual basis, the year-end results are slightly less than the amended budget, coming in just $444,715 under budget. And that is due primarily to the effect of the anticipated year-end variance. And as you'll recall, the anticipated year-end variance is a budget balancing tool. We budget this as a revenue, recognizing that in this particular year we expected to come in with about $2 million in expenditure savings across the various departments, not knowing exactly where that expenditure savings would be realized. We budgeted as a revenue. So we won't see anything in the actual column for that. As you'll see when Mr. Samario gives his presentation, the departments did come under by that amount, and he'll go through that with you. When factoring out the impact of the anticipated year-end variance, our general fund revenues came in over budget by $1.48 million. So that was good news to see. Now that's compared to the amended budget, and the amount compared to our year-end estimates, which were used to project where we thought we'd end the year, and the basis for developing the budgets for fiscal year 2012 and 2013, that was a higher number, and we came in much closer. But at least in terms of budget, we did better than anticipated. Starting up at the top with the first three, our three largest tax revenues in the general fund. These tax revenues make up over 50% of general fund revenue, and they also comprise almost 85% of our total tax revenue. So it's a significant portion. You can see between sales tax and TOT, we came in over budget by about $1.1 million, and that was anticipated, with a slight decline in the property tax over the budget. I'll go into those three in a little bit more detail since they are such a large piece of the general fund in a little bit. We'll drop down below that line and go through some of the other general fund revenues. The next line is UUT, as shown there, which is our utility users tax. That's levied on the various utility services on the end consumer, a tax on the end consumer. The amended budget for UUT was just over $7 million, and we came in just under $7 million, short by about $97,000. That was due in part to the cellular sector, and the bulk of it was declines in the cellular sector. Our largest cellular provider, AT&T, changed the methodology in which they levy UUT on consumer bills, in particular with the data plans, resulting in a less being levied on each consumer bill. They also filed a class action lawsuit and began retaining a portion of the UUT due to us. So that was the largest decline in UUT. We also, to a lesser extent, saw a decline in UUT due to lower water sales this year, and therefore less UUT levied. And I know Mr. Samario will go through that later when he goes through the enterprise funds. The budget shortfall in UUT was more than made up for the overage in franchise fees, and that was due to SoCal Gas. SoCal Gas pays us franchise fees based on an estimate each year. And in 2010, they had over-advanced us for the previous 12 months, and so the last 5 months of 2010, we didn't receive any payment, and gas is a large portion of our franchise fee from the gas provider. So we built the budget based on where we thought we were going to end the year on fiscal year 2010, which ended up being low. So we did realize a budgetary surplus at the end of this year, again, due primarily to, to the gas franchise fees. Moving on to business license, our business license ended the year at $2.2 million, which is just slightly above the amended budget in this case. We saw that business license activity remained steady over the year, with both 2010 and 2011 numbers of renewals as well as newly licensed business running steady at about 14,500 businesses. Property transfer tax came in slightly above budget, and you'll recall that's the 0.11% of assessed tax that's levied when a property changes hands. It's a sales tax, if you will, on the transfer of property, and that came in slightly above budget. We did see that the number of sales using court report statistics were down about 15% in number of sales in fiscal year 2011 from fiscal year 2010. So presumably that little bit of increase was due to higher property sales. Portfolio interest, as you know, the yields that we can secure in the marketplace have continued to decline, far lower than our estimates. We assumed over the course of fiscal year 2011 a 2% reinvestment rate, and we're not getting anywhere near that, resulting in a slight shortfall in our portfolio interest by year end of about $42,000. You'll see a big surplus in VLF, which was budgeted at $150,000, and for a base VLF, we actually came in for the year about $200,000, so a little bit above what we projected, and it's been really unstable since the triple flip. And we haven't been really able to count on that as a regular revenue. A lot of months, the state fees to administer the VLF would exceed our apportionment, so we would have many months where we didn't even get it over the last several years. However, the state budget on July 1st eliminated the VLF to cities, and in anticipation of that, the state released all the held contingency funds. They had held a contingency for each year for cleanups, presumably. So at the very end of the year, we got a large payment of over $200,000 corresponding to back UUT that they had retained from fiscal years 2008, 2009, 2010, and they were just cleaning it up in anticipation of the elimination. So that resulted in a positive budget variance of $281,000. Is there a question?
Oh, please, Mr. White.
Thank you. What is VLF?
Vehicle motor license fee. Bob, do you have a good explanation for VLF?
Essentially what happened was, and I'm not going to get into all the details, but we began several years ago receiving property tax revenues instead of vehicle license fees. We were getting somewhere around $5 million, I believe, $4 or $5 million a year in vehicle license fees, and as part of a state maneuver, they basically said, we're going to give you equal amount of property taxes that we're going to take from you for VLF, and it was part of a whole overall swap with involved sales taxes that I'm not sure we want to get into right now, but essentially this is just the remaining piece that we're getting, and again, as Ms. Starr indicated, it's a small fraction now of what we were in the past, and from my perspective, it was a positive move for us because we are now getting that as property taxes, and we received on the same basis as other property taxes. And over the last several years, until just recently, we were seeing substantial growth in that revenue, whereas in BLF, we weren't seeing much growth historically.
Moving on to other revenues, that's just all the other small revenues aggregated together. It includes, the vast majority of it is the overhead allocation, which is the charges to the city's enterprise funds for general fund administrative services provided, such as financial management, city administration, city attorney's fees, payroll, things like that. That comprises $6.5 million of that. It also includes various other revenues, such as the waterfront debt repayment, SB 90 reimbursements, rents that the general fund receives on facilities, MLAP interest, and some other minor revenues. And that came in just very close to budget. It's just over $7 million with a surplus of $82,048. We've already discussed the year-end variance and why we won't receive that, as it'll be recognized in the expenditure savings in the departments. And the bottom line there, you'll see departmental revenues, which is a large piece. It's about 25% of the general fund. The revenues came in on an actual basis at just over $26.6 million. And on a $26.6 million budget, they came in pretty close with a slight budget variance of negative $55,765. Now, after we go and look at the sales tax property and TOT in a little bit more detail, we'll come back and look at the department revenues by the departmental revenues by department, so you can see how each individual department did.
Ms. Tara, do you know what the the outstanding balance is on the waterfront loan?
I don't off the top of my
Okay.
head, but I can certainly
We can get that later. That's fine.
email you. That's two pieces.
Yeah, there are actually two loans.
Okay.
One was back from I think the 80s. The balance of that is right around $1 million now. And then there's a second loan that we provided to the waterfront for the construction of the offices that they have there at the harbor. I believe that loan outstanding is somewhere around $1.6 million.
Okay. Thank you.
Thank you.
Ms. Self.
Thank you. Does the airport doesn't show up quarterly? How often do they pay?
The airport promissory note?
Yes.
That is held in the pooled investment portfolio, so
Okay.
it won't show up as part of the general fund.
Okay.
The excess, not excess cash, the cash held in the general fund at any given month is invested in the investment portfolio,
Okay.
and so it won't show up here. No, it's not a general fund loan.
Thank you.
Good question. Up on the overhead, you'll see the sales tax schedule, which shows by quarter, and you can see the quarter ends in the first or the far left-hand column, being September, December, March, and June of each year. And as you'll recall, sales tax is paid quarterly in arrears. The state gives us an advance, and then 3 months after the end of a quarter, they'll give us a cleanup payment, so we know exactly how we did during a given quarter. At the end of fiscal year 2010, you can see that our sales tax revenues were still declining at $16.7 million, with a 4.8% decline over fiscal year 2009. Based on where we thought we'd end the year in 2010, we budgeted flat. And at that time, we only had one quarter's worth of data. You can see in the September 30th quarter for the budget for fiscal year 11, the growth is projected at 0%. Which meant if we forecasted where we thought we were going to end the year on an actual basis, we could actually or on a budget basis, we could actually decline 1.6% and still meet budget because we came in a little better at the end of 2010. You can see in that fourth quarter we posted a 4%, and that really helped us out. So as we moved through fiscal year 11 in anticipation of developing the budget and making forecasts where we thought we'd end the year, we bumped the sales tax estimate, not the budget, but the estimate for planning purposes, and assumed a 2% and a 1% in the two final quarters. As you know, year to date, we have actuals through March 31st, and as I mentioned at the beginning of the presentation, we'll have the June 30th quarter results later this week. But for now, we've just plugged in our 1% estimate, which puts us at $17,148,726 and puts us into positive growth territory once again over the previous year with growth of 2.7%. So we're confident that, or we're hoping that the 1% holds and maybe comes in a little better. But as soon as we get the information in and crunch the numbers, we'll get that out to you. Moving on to transient occupancy tax, which is TOT, or our bed tax. It's the 12% tax levied on room stays at hotels here in the city. 10% goes to the general fund. 2% is restricted for creeks restoration, water quality improvement projects, and receipted directly in the creeks fund. The schedule here, again, only shows the general fund portion since we're going through general fund revenues. We receive TOT monthly, and we receive it very timely from the lodging establishments here in the city. Our TOT code requires that it be remitted and reported to us 10 days after the end of a calendar month. So we receive the information very quickly and therefore can rely on it to really gauge some measure of how our local economy is doing. You can see at the end of 2010, our TOT revenue totaled $11,464,132, and that was another decline, as we had seen in previous years over fiscal year 2009, a decline of 4.8%. We built the budget based on 8 months worth of data through February, and we forecast it flat for fiscal year 11, not really knowing how quickly our revenues were going to turn around, which meant on a budget basis we could actually decline 2.7% and still meet budget, because the end of 2010 you can see the TOT really turned around, and we were happy about that. As we move through this fiscal year, we revised our year-end estimates based on the results in the first 9 months of the fiscal year. Many of those months posted double-digit gains, like July of 2010, October, November, December. And we forecast 5% overall for the remaining quarter. We weren't sure how each of the months were going to come in, but we said based on the results we've seen year to date, we think 5% is probably a good number to forecast and end the year. As it turns out, in the last quarter, we did much better than 5%. April of 2011 posted 10.8% growth, May posted 9.2% growth, and June posted 11.6% growth. So overall, we hit almost $12.5 million for TOT for fiscal year 2011, and 8.7% growth over the previous fiscal year. So we're glad to be back in positive territory with that one, too. The adopted budget up there shows $11.157 million on an adopted basis, but I just wanted to remind the committee that during the third quarter financial review, it was realized that fire had a substantial shortfall in their own budget because of lower mutual aid revenues and high overtime due to injuries on duties and some staff vacancies that resulted in overtime overages due to minimum staffing requirements. And therefore, some of the surplus that we expected at year-end for TOT, Council went ahead and appropriated that at third quarter to cover those shortages in the fire department. And that third quarter adjustment was just a little bit over $900,000. So at least in this fiscal year, $900,000 of this positive budgetary variance was already appropriated by Council. And the last of our major tax revenues is property tax. And that has not turned around yet. We've seen still a decline. The first item, the property taxes, is our assessed roll, and that declined from last year by 0.3%. We saw a substantial decrease in the airplane property tax, which is levied on property owners based on the value of the planes. Interest was down, but of course that's a smaller number and has gotten smaller over time with market yields. Our supplemental did very well this year. It was over budget. We budgeted $300 and it was slightly over budget, so that did well. But we were really hit hard with the county admin fees that have continued to increased disproportionately over time as they levied fees on the whole triple flip amounts versus just our base property tax, and has resulted in skyrocketing admin fees. So our total at the end of the year for property tax was slightly lower from last year by 1.1% and came in at $22.78 million. And as you know, as our largest tax revenue, 1% of a large number is a large decline. So, we hope that this turns around soon. That it's certainly reflective of, real estate markets across the nation, and we have fared better than other cities. Lastly, I'd like to turn to departmental revenues, and we can look and see how the various departments came in compared to their budget at year end. We'll start with community development, and community development came in roughly $250,000 better than their budget, and this was due primarily to building permit activity. Building had a steady, large volume of number of small and large projects throughout the year. They budgeted conservatively, and the permitting activity really turned around and kept staff busy, and that resulted in the positive budget variance of $248,918. The finance department also posted a positive budget variance of roughly just under $51,000, and that was due to the late penalties on utility bills. That's a relatively new fee that we've implemented, and each year we've budgeted it conservatively, and it's come over each year. So at the end of fiscal year 2011, it came in over again. Fire posted approximately $154,000 positive budget variance over what they had originally budgeted. That amended budget did have a reduction for mutual aid as part of the mutual aid revenue as part of the third quarter review, but they came in about a little bit, or they came in line with that at the end. They had a surplus in the ARF revenue, which is the reimbursement from the airport for the fire services that are provided by the general fund, and that $85,000 surplus corresponds to an equal amount of expenditure overage in the overtime line item, and so the airport pays on an actual basis. So on a net basis, $85,000 of that surplus is offset by a corresponding increase in expenditures. Other revenue overages in the fire department included a $33,000 increase in fire inspection fees over budget, as well as $32,000 in the Prop 172 half-cent sales tax, which did a little better than we forecast. Public Works was short on building work order revenues by approximately $294,000, and they had built their budget based on the expected actual for fiscal year 2010, which was an extraordinarily high year and way above the 3 or 4 year average. So the actual came in roughly closer to the average, which happened to be under the budget. Library was short $114,000 from where they thought they would be, but in the case of the library, they more than offset this with expenditure savings, and this really corresponded to a lesser amount of gift funds that we transferred in, so we were able to preserve the library gift funds due to the expenditures being saved due to salary savings and lesser amounts paid out to Black Gold Library Cooperative. Parks and Recreation, same thing. They had lower facilities rentals. They've seen private and corporate events during this economic downturn fall off, but they also had more than enough expenditure savings to offset it. And the other departments, that slight overage corresponds to the City Attorney's Department, who was able to bill the RDA for more hours based on the increased activity in advance of the elimination of RDAs. They spent a lot of time on that, and they also had some unplanned litigation and admin citation revenue. So while there were some ups and downs and swings, at the end of the day, the departments came in right around on budget, and if there are no questions, Bob will go on to the expenditure side and see how that lines up.
Questions from the committee members?
Yes. Could you explain why the police is over?
Oh, I'm sorry. My glasses aren't that good. The police department was short in parking violation revenue by about $100,000. However, they did have revenue surpluses in other line items like the Prop 172 half-cent sales tax and some of their other revenues that partially offset that $100,000 parking violation budget shortfall.
Thank you.
I'm sorry, that was not
That's okay.
intentional.
No, I'm sure it wasn't.
Thank you, Mr. Chair. So the other side of the equation or ledger, we're going to look at expenditures for the general fund by department. And you can see that's the amended budget on the far left, not the adopted, but amended budget, which includes any carryovers and any adjustments throughout the year the council approves. Then the year-end actuals, so those are, again, like I said, pretty much final numbers. They shouldn't move much, but it just depends on how we go through the audit. And then the encumbrances, and just to kind of note at the very bottom, $248,000. Some of you may or may not recall, or some of you may recall that that number historically was much higher, but we have, over the last few years, tried to put a lot more pressure on departments to just to see what actual outstanding encumbrances, meaning outstanding purchase orders and contracts, do we really need to carry over. We've cleaned out a lot of those that were just carried over from year to year that had no activity. They were essentially stale purchase orders. So we've been able to lower that number substantially from somewhere around $1.5 million down to almost $250,000. So that's really good news. So it's a much smaller impact now because it does affect available reserves because we have to provide for those funds. So just first at the bottom line, I wanted to show you that in total we were under budget by about almost $2.7 million, which is really good news. As Ms. Atara indicated, part of that is what we kind of planned and through our anticipated year variance, which we budget as a revenue. And what I wanted to show you is I backed out the appropriated reserves because that's an amount that we knew we weren't going to spend. So I wanted to just adjust for that to show how that compares to what our anticipated year variance was. So it's pretty close. We pretty much nailed it. We did a little less than what we thought we would, but still a couple $100,000, not bad. The big, obviously appropriated reserves not being spent were a big boon to the year-end variance. I'm not going to go into a lot of detail with each department because you'll see some sizable variances there, for example, in community development and even library and parks and recreation. As I was talking to the various departments about the reasons for that, it's sort of a general theme of vacancies in the departments, holding back expenditures, really doing a good job of managing each line item to make sure we're not spending unnecessarily. So I think all that has contributed to very good variances in each of the departments. I'll speak to three of those that are listed, starting with the city attorney. As you can see, they're just slightly over budget. As you may know, they have a very tight budget, not a lot of discretion there. And in this past year, 2011, they did overspend in a few line items where in total it caused them to go over by almost $12,000, a very small amount relative to a $2 million budget. We are recommending to council that we allocate some of the monies in the appropriated reserves, which are the very last line in that schedule, to cover that amount because obviously we can't overspend their budget. And similarly, in the police department, you see they're over budget, but that was actually pursuant to direction from council to overhire, and they did so. And you'll be hearing more about that in early October during our budget work session and about the status of those that overhiring. But they essentially have gone over budget, and we put aside, as you may recall, $200,000 in the appropriated reserves to cover potential costs associated with overhiring, which we are now saying we're going to need. And so our recommendations to council also include an allocation of the appropriated reserves to cover that overage in the police department. So essentially that's really the story here. I think it's good news. We've done very well. It's a very favorable variance at the end of the year, which is going to, of course, help the bottom line. And I'd be happy to talk about any particular department you might have an interest in, but essentially, as I said, the story is savings mostly from positions that were vacant throughout the year.
With questions?
Yes.
Mrs. Self.
Yeah, I get a copy of this.
Absolutely. And I should be as an attachment to the agenda report, but yeah, I can give you a copy
No,
of that.
it wasn't. I just had this.
Are you sure? Okay.
Okay, we'll get you a copy.
Thank
Okay.
you.
So this next schedule brings it both together, the revenues that Ms. Tara talked about and the expenditures, and you can see this is always kind of an interesting schedule because it's almost three-dimensional, at least two-dimensional, because we're comparing amended budgets both up and down. They compare to actuals across. But let me just start with the amended budget. The total revenues are $100.5 million compared to $100.1 million. So our amended budget already included the budgeted use of reserves. And that occurs for a couple reasons, as you know, because we have a balanced budget. When we adopt a budget, we have carryovers from the prior year, as I mentioned, outstanding encumbrances and other discretionary carryovers, but we also have then amendments to the budget during the year. For example, one of the big amendments this past year was for overtime costs in the fire department that Ms. Tara alluded to. So we increased the budget by that amount. And that was actually covered by revenues, but that's an example of one that we might see throughout the year. But in effect, the net impact of all those amendments and carryovers throughout the year resulted in a budgeted use of reserves of $1 million. The final numbers, however, show that we ended up with a surplus of $1.4, almost $1.5 million. So our revenues, while still under what our budget was, we're well under on the expenditure side. That's where we saw the biggest variance. All the way across, you can see that variance of $500,000 or $444,000 shortfall revenues, but far offset by the $2.7 million in favorable variance on the expenditure side. So on a budgetary basis, we did $2.2 million better, but what I really focus on when we get to the end of the year is what's the bottom line? What are revenues, actual revenues minus actual expenditures? And we did then contribute to total reserves almost $1.5 million. Any questions on that? Okay, so now let's take a look at what that means then to our reserves. The first number you see is the fiscal year 2012 operating budget. That was the adopted budget that became in effect July 1 of this current fiscal year, $103.1 million. That's the number we use to determine what our required reserves are for the year that we measure as of June 30, 2011. So, for example, our disaster reserve, it's 15% of the operating budget, so that $15,467,000 is 15% of the $103.1 million above. And similarly, the economic uncertainty reserve, 10%, is 10% of that number above. And then, as you know, the capital reserve is just a fixed amount of $1 million. So those are the total reserve requirements pursuant to city policy, $26.8 million. The actual reserves that we have on hand now, as we've measured them, and again, these are somewhat preliminary, but pretty close to being final. We have a fully funded disaster reserve of almost 15.5. Our economic reserve, as you know, has been under for a few years now. It's at $3.3 million, so it's below what it should be by almost $7 million. And then our capital reserve is fully funded. And just kind of as a reconciliation to see how we kind of got there, down at the bottom, our reserves last year that we presented to you were $19,046,000. The net surplus that we talked about just a moment ago, the 1.45, adds to that number, beginning number. However, because our budget grew in 2012 relative to 2011, we have to put 25% of that budget growth aside in our required reserves. What's interesting, in the last couple of years, we've seen that number have the required reserves going down because our budgets have gone down because of all the cuts. But we've kind of reached a stable point, and now we actually see a little bit of growth. We saw a little growth in 2012 relative to 2011, so now we have to put 25% of that growth aside in our reserves. So that consumes some of that year-end surplus. And then we also have our general plan update fund. We're still incurring costs in that fund. In this past year, we incurred $227,000 in net expenses because there are some revenues coming in. And those are funded from general fund reserves. So we've always factored that into the calculation of what we have available. And then just some minor adjustments arriving at the 19.8, which is what you see above in total actual reserves. So even though we ended the year $1.45 million to the good, the benefit essentially was about $800,000 to the available reserves that we have. And then lastly, just to kind of give some historical perspective, this just kind of shows you, I want to maybe zoom in a little bit, kind of the changes over time since fiscal year 2005. The first four columns represent the amount of reserves that we should have in the bank, and then you can see at the far right what we really have in terms of over or under. I picked 2005 because that was actually the first year that we fell under policy reserves by $294,000. And you can see also the impact of our general plan update, all the costs we've incurred over the last several years. And that's a cumulative number. It's not additive, but cumulative, meaning 2.3 has been the total spent. But that does impact our available reserves. But you can see that we reached a peak in 2008 of how much we were under reserves. It's really this is the sum of the $2 million in GPU fund balance and the $8 million reserves under. So we were $10 million under reserve policies at one point. And since then, we've improved that situation, and that was when we made the decision, at least at the city administrator level and council level, to say, we're not going to use any more reserves. We're going to hold the line and make sure we end the year with not just consuming any more reserves, but in fact hoping to add. And we have added some reserves, so you can see we are down to, like I said, $6.9 million under policy reserves, where at one point we were over $10 million under. Any questions on that schedule? lot of data there, but I think the concept is we're doing better. Since 2008, things have improved. We have not used any more reserves, and in fact, we've added to some reserves.
I have a quick question, Mr. Samario. What was the last year that revenues equaled this year's almost exactly 100 million? Last prior year, if you know.
Do you know that? I don't know that. I'd just be guessing.
We'll catch it later.
Yes.
Thanks.
Okay, unless there are any questions on the general fund, reserves, and the like, we can move on to the enterprise funds. And same here, I'm not going to get into the details of each of these enterprise funds, just go speak to the ones I think are of note. The first one, you're going to notice the water fund, some interesting variances at the end of the year. Revenues about $2.2 million under budget, expenses $5.4 million under budget. And Mr. Ferguson, Bill Ferguson here is here to I think, provide more details if necessary. But I know on the revenue side, part of the reason for that $2 million shortfall is because of just we had good weather. I mean, in the sense that we had cool weather in December last summer, we had some good rain, which we need, but it obviously affects water sales. So almost half of that amount of revenue shortfall is attributable just to the weather, and we know that. We know that weather has a major impact on water sales. And then the rest of it, we don't have a good answer, believe it or not. We're still kind of doing some analysis and research as to why we are $2 million under. There are some inconsistencies we've seen, and I know Mr. Ferguson and along with Rebecca Bjork are looking into that. So we don't have an answer yet as to why we're that far under budget, but we're going to be looking into it over the next several weeks. On the expense side, Bill, I don't know if you were able to speak to the $5.4 million shortfall. I'd asked them to become prepared, hopefully, to speak to that.
Well, the short answer is no, because I was more interested in the revenue shortfall, but it reflects the fact that in part we have expenses that were budgeted for some water programs that were not incurred. One example would be expenses associated with the pass-through agreement. That hasn't been implemented yet, so we're not incurring those costs, things like that. So that's part of it. I can't put that all into the $5 million, but we'll be looking at it more.
So maybe by the time we get to council, we'll give you more information on that one.
Sure.
Working our way down, I think just want to point out airport only because they've done pretty well, even though the number of employments and activity at the airport in 2011 relative to 2010 has been pretty flat, but they have seen some increased revenues in certain areas. One in particular, the commercial industrial area, where they generate lease revenue from tenants. They've had some vacancies in the past that they've been able to fill in 2011, which has bumped up their revenues. They also have a new revenue that they implemented last year, a general aviation landing fee. And what's interesting is they implemented it in January of 2010, so it was in place a year and a half ago or 2 years ago. But for whatever reason, it just was not budgeted in 2011. So they just forgot to put about a $250,000 budget in there, but they generated that much in revenue, so that contributed largely to that revenue increase or surplus. In the Gulf Fund, you can see they're under budget, and they're still trying to figure out a way to increase rounds. They've done a lot of work on the marketing side of things and trying to get more people out to the course. Weather has not been helpful to them. We've had a lot of rain spread out throughout the last year, and just like in the water fund, the weather really has an impact on whether people go out and play or not. And if it's raining, of course, people just won't get out there. So they continue to monitor that. The expenses, you can see, they're under budget as well, which has helped. So that's offset most of their revenue loss, and they've done that intentionally in recognizing that their revenues are going to be uncertain.
Mr. Samario, do you happen to know, just offhand, what they're doing to reduce expenses?
I don't. I'm sorry. I'll see if I can get that before the council meeting.
One thing is about painting the building, that they're going to repaint the clubhouse. That was $45,000. What kind of positions that in?
Okay. Thank you.
And then lastly, just the waterfront fund, you can see they're actually under revenues, and they've also been impacted by the last summer very cool conditions, so parking revenues have gone down. And then the general economy has impacted some of their other revenues, like slip transfer fees, where it's just like the real estate market. There isn't a lot of activity there, which, when there's changing of slips, then we get revenues. And then the construction they were doing at the marina has affected the visitor fees. So they're just generally down this year, but most of that is because of the cool weather last summer. So with that, I think that concludes our report, unless there are any questions.
Questions? I think we can move on.
I think we're done.
In that case, I think we can adjourn.
Thank you.
Thank you.